Hi, thank you. I'm Gabriele from Rigo, and today I'm going to talk to you about how you can implement asset management infrastructure on the blockchain. So use blockchain to create funds, investment funds, and manage money for third parties. But first, I want to tell you a story, my story. I started working in asset management for a hedge fund, made a very quick career, and worked for an asset management company, became a fund manager, and then exited the asset management company and kept on running the fund. But I had no distribution. So eventually, the fund was taken away to be given to a bank who had a distribution. And there, my feeling for creating a meritocratic system for traders became stronger. Ethereum didn't exist back in the day. And eventually, I found out that with blockchain technology, we could create a system where the creation, setup of funds, and running investment strategies would be very, very inexpensive, so that anybody could access the asset management market without the need to go through an existing intermediary. And that's how Rigo was started. What is Rigo? Rigo is a protocol for decentralized fund infrastructure. And what we mean by that, it allows anybody from individuals to institutions to create investment funds on Ethereum. We start from this particular blockchain to organize assets. And what are the assets we organize? We have to make a little bit of a step backwards and start from our own definition of blockchain. Think about the internet in the early days. Back in the day, everybody was scared about the internet. And right now, everybody is scared about blockchain or cryptos. Half of the time we spend on demystifying cryptos as something weird. So just as the internet is a better way of transferring information, the blockchain is a better, more secure and efficient way of transferring value. How do we transfer value on the blockchain? Through tokens. We've all heard this famous quote, software is eating the world, and now software is eating value. So basically, the word's value is becoming tokenized. You can represent anything on blockchains in the form of tokens. We have native tokens, which are technically the tokens at the basis of blockchain protocols. We have external tokens, like real assets, tokenized, derivatives, securities. Anything you can think of will be tokenized in the future. Of course, we are already seeing this phenomenon happening with ICOs, tokenization of companies or protocols. There's different interpretation about it. But we have a vision of a tokenized world where banks works as blockchain protocols. So they are powered by blockchain protocols. Banks are platforms. You will find them in your pockets, apps, web applications, and finance will be accessible in a better way. And money will be transferred in the form of tokens. So right now, of course, the use of cryptocurrencies and user adoption is prevented by the lack of tools. But you're already using tokens without realizing. And in the future, you might very well be utilizing blockchain tokens, cryptocurrencies, either realizing it or willing to do it, or not even realizing. So we have all these tokens. What are we going to do with these tokens? Especially when you hold many, the situation can get messy very quickly. So you need tools, places to organize those assets. And you might want to do it through smart contracts. And you also might want to manage money for third parties. So, okay, that's how we came up with RigoBlock, which is a series of tools that get utilized either from a front end that we're going to show later, or integrated into other existing services so that you can easily store and manage crypto assets. And by crypto assets, we really mean tokenized assets. And we envision that over time, the two words, which are now separate, the legacy financial world and the blockchain world, will kind of communicate smoothly or be integrated. So let's define a bit the architecture of blockchain platform. Normally, we find ourselves in front of a front-end UI and a back-end. And so we structured also our product in a modular way. And this is actually what we envision that is going to be the architecture of applications in the future, where protocols and platforms talk to each other through APIs. And so the result is that it becomes easy for users to actually access these platforms, and that through blockchain protocols, it becomes easy to create entire applications on top. For example, in what is our core, which is decentralized asset management, we don't only enable anybody to create funds, we also create anybody to create their own asset management application on top of our protocol. And now I want to talk a little bit about how blockchain applications differ from the traditional world, and how you can create better incentives mechanisms from investors and managers. So in our funds, like the standard applications that we offer, we've got rid of management fees and performance fees. So the investors will get 100% return on their investments, and the manager gets rewarded not by charging fees to the funds, but they get rewarded in tokens by the network. What does it mean? It means that on a technical level, you can create different incentives mechanisms, which have the power both to augment the network effects of communities around platforms and applications, and also to kind of disrupt the asset management industry in a way that it also improves the quality of service, eliminating some of the conflicts of interest that are inherent of asset management and distribution. So we've designed an algorithm which we call proof of performance, which takes into account the assets of a fund, the performance, and rewards the managers of the funds according to these factors. And of course, we require that the managers hold some of the tokens. So this is one of the examples of different incentives systems that can be created on top of protocols. And this is also a cool thing because it shows that monetization strategies for blockchain applications can be embedded at a protocol level. Okay. So here, we're going to show you an interaction of a user. We're showing just after a fund is being created. So this is the side of an investor. This is an application that works with the backend, the blockchain as a backend. So it's kind of a different architecture. And basically, we're showing how easy it can be as soon as a fund has been created to invest. This is a like streamlining processes that in traditional finance require days to be executed. The creation of a fund requires months, whereas the subscription of a fund requires days. And here, we're just showing how within seconds, you can just input the data, execute, and here, this is live, and basically, an investor has just invested in one of the funds. So this is how easy and simple it is to interact with blockchain applications. One very core element of what we do is that we do not store the keys, users' keys. So this application right now that we've showed works with MetaMask, which is a browser extension, but you can think of it as a wallet. So such kind of applications can be embedded in any type of wallet. And so what comes out from this is what we call utility tokens that do not have any binding with the company behind it and are just a basis of incentives. Their value is derived by the value of the network. There's a long discussion about what utility tokens are, how a token can be defined an utility token. So I'm very happy to answer questions if you have any and to come back also on this slide. Most importantly, utility tokens should be live. So it is our and technically they should be necessary. So okay, sorry. So how do we implement a monetization strategy on top of our protocol? The managers of the funds are rewarded with our tokens, and we take a royalty on each reward of the managers. So this means that even open source projects can create what we called self-sustaining protocol development. So incentives that allow for the long-term development and evolution of open source projects or communities. And what is at the basis of the proof of performance is basically a reward factor and the minimum requirement. So there's some parameters which get decided by the token holders. And the whole system is based on economic theory and on the idea that the interests on the investors and the managers should be aligned. So in terms of like where we started, in order to get here, we've come a long way. So the whole project was originated in 2016, early 2016, and there's been a public alpha since 2017. So the path of decentralized application for going to production has been quite long for us, but it's been long for almost any startup. The cool thing about the general market, so not just about us, is that within 2018, you will see a few applications, decentralized applications going live. And I say many, a few, because there's quite some applications which are very interesting going to the market. And of course, compared to the whole project, to the number of projects around, they're just a minority. But the whole ecosystem is growing. And of course, the interest that is growing around projects is beneficial to the whole ecosystem. So blockchain as a word, as a reference, is getting acknowledgement by the mainstream. So it's already attracting interest from the mainstream. And a cool thing that we're doing and that we'll keep doing for the whole year is working with exchanges, decentralized exchanges, hybrid decentralized exchanges, to connect them to the funds. So a cool example of interaction of platform to platform, open platforms which communicate through APIs. And through APIs, we're going to be able to integrate, not only us, but blockchain applications in general are going to be able to integrate and offer also a smooth user experience, which is the major obstacle for mainstream adoption right now. So, I mean, we're very happy for you to join our community, come on our Telegram channel, and I mean, ask us questions. We have a booth at the expo. So right now also, I mean, I'm available for questions. And so that's why we called RigoBlock a perfect tool for organizing the word's value. Thank you.
Thank you. Are there any questions here in the room? Here?
Okay, so we have one official partnership with Ethfinex, which is the decentralized exchange from Bitfinex. So on that, there's been a release. And then we're working mostly with 0x-based relayers. 0x is a protocol for creating hybrid exchanges. So I'm going to get a little bit on the technicals. Hybrid exchanges are exchanges that allow for having an off-chain order book, on-chain settlement, which basically make an efficient use of the blockchain by reducing the amount of transactions that go to be written actually on-chain. And at the same time, it enables fast execution because the off-chain order book allows for decoupling the time to settlement on the blockchain from the time from the speed of execution. So you can have very fast exchanges that settle with their own time on chain, and basically we're working with many of them. So Ethfinex we can disclose publicly, but the others, you can find on the chats who we're working with, because some information is around, and basically there's this whole concept of a global liquidity pool, and we're aggregating the order books from exchanges, enabling the traders, the managers, to access the liquidity pools of the exchanges. So the cool thing that we're doing, we're not building an exchange ourselves. We partner with the exchanges so that the funds become liquidity providers to the exchanges. So there's kind of a two-way binding partnership. Sorry, can you repeat the question?
I think they put it back. I put it every time there.
Yeah, well, the parameters are set by the token holder. So we're kind of optimizing the parameters and presetting them, but the token holders will be able to, like, the market will decide what's the appropriate amount of reward. Basically, there's this two-way incentive. So there's like the trader gets paid 100x. And the protocol maintainers receive 5 of those 100. So, I mean, the incentive, of course, the token holders want the reward to be 0. So that there's less, less distribution of the tokens to the market. But the network itself, for guaranteeing the long-term sustainability, some amount of reward is necessary. So basically, it's whole based on the equilibrium of where the investors and the managers will find themselves for the optimum parameter. So those we're setting ourselves initially, but eventually it's going to be the market to decide. Yeah, I mean, we're very, very keen on collaborations because especially venture capitalists are funds. So they know what a fund is, how it works. We've designed 2 applications of the protocol. Many more applications are possible. And the protocol is designed with applications in mind. So if a venture capital fund can help also on the kind of customization, either requiring a customized solution or willing to develop itself their own version for their own purpose. What we've designed is applications that make it easy for emerging traders to create strategies, track record, have the minimal impact in terms of potential of conflicts of interest, costs, and everything. But of course, for corporate solutions, it's a completely different discussion. The cool thing is that a venture fund, any type of fund that wants to replicate their own strategy on chain, on the blockchain, they don't have to create a whole protocol. They just need to take ours, fork it, create, maybe amend some of the rules, put their own rules, and leverage on a ready-made incentives mechanism. So it's kind of easier for them to create. And they can also create their own fund management house with our protocol without need of coding on the blockchain backend. So they can actually take our product and basically connect through APIs on their platform and sell under their own brand.
Any other questions here? We have space for one more question. Not? Okay. Thank you so much, Gabriele, for being here on stage.